Hi everyone, and thanks for tuning in to another episode of Budget Investing. So today I have a couple quick news stories to cover with you that I thought were quite interesting that I've seen over this last week. And then from there, I want to show you how we are going to use PE to really decide if we should be looking at this company or if it's an easy buy for us right now. So first, let's jump into that first news story. So my first story that I wanted to cover with everyone today is, of course, being on Elon Musk, the man who seems to always be in the news. And of course, for him being Tesla, talking about how they might be entering the lithium extraction business as the prices are so insane. Now, if you follow Elon on Twitter, you will have seen that he would have already shared this. But basically, he's just showing those prices of lithium per ton since 2012 all the way to today. And it going from $4,400 all up to $78,000. Now that's a crazy increase in such a short period of time, especially considering since 2021 it was at $17,000 per ton. Now this is a crazy increase, and if Tesla were to get into this would then, of course, being further expanding their grasp on the total supply chain for their Tesla industry. Tesla already has such a huge impact on everybody today, and of course the funding that it has building out the SpaceX program to the electric vehicles and really just kind of driving the technological improvements that we're seeing in so many aspects of our lives. If they're able to shore up one aspect that is financially slowing them down, that could potentially help propel them forward even further. So I will be keeping a close eye on this to see if Musk is able to continue growing this, or if maybe we need to just kind of step back and go, hey, maybe he's kind of getting a little bit too big. But there's just a lot to follow on with this, and it's still too early to tell what might come out of it. The second article that I wanted to share with everyone today was about General Motors Canada. They have received a huge funding grant from the federal government and provincial governments in Canada for $258 million to help them expand and adapt one of their current manufacturing facilities. Now, this facility is creating 2,600 jobs, which is great for the Canadian government. And General Motors is already spending $2 billion in total to launch its first electric vehicle production, which is fantastic. So really, this kind of goes along with the whole Elon Musk thing, collecting more lithium or potentially getting into that market, as this seems to be a growing market. And if you're not already kind of invested in it, or at least trying to give yourself some exposure, I would look into it to some degree, see where there might be an undervalued position for yourself to potentially profit off of this in the short and long run. So the third story that I wanted to share with everyone was, of course, on Sonic the Hedgehog number 2. This is very different. Obviously, it's not directly related to investing, but this was kind of that first step in regards to that return back to normal for movie theaters, as they have really taken a heavy beating into their profits over these last few years with the coronavirus and everything that's occurred. The other aspect of it is, even the movie companies themselves have maybe been a little hesitant to jump into things. The industry is really kind of seeing this as their first kind of step back in, as they already saw, $6.25 million in preview tickets kind of going out. So fingers crossed that, people are starting to head back into the theater, but it's still really early to tell. And maybe we're going to start seeing that people aren't 100% reliant on those streaming services at home, and we might actually be able to start to see theaters really start to thrive again as we are kind of making that transition back to normal. But we'll kind of continue to monitor this, as this could be another potential opportunity for us to profit a little. All right, so let's dive into this. So what is PE ratio, and how in the world do I use this to know if I'm going to make some profits, hopefully here in the short and long term? Now, I want to use this to really be a guide for myself to go, hey, this is a company I need to dive into to go, this could be making me a lot of money, or why in the world is this happening? Why are they at that point? So first and foremost, what is the PE ratio? So it's a metric to express how much investors are paying for every $1 of earnings that this company is giving to you. So really simply put, if the company is trading at $100 for one share, and they are reporting that their earnings per share is $5, then its PE ratio would be 20. So really, you're just taking that market value price per share and you're going to divide it by that earnings per share. It's just to give you a really quick snapshot of, hey, this is how much money the company's making, and this is how much the market thinks the company is worth. So for a little bit of context here, I have the S&P 500's PE ratio over time. Now, I've just like every other stock on the market, the prices come up and down and things are always changing. But you can see that today we're trending around that 25 ratio right now. And historically, that's a little high than what we used to be. Our average of all time is around that 15, 16 point. And of course, our all-time high being 23 back in 2019 when the market really kind of went wild. And then the lowest it's ever been was back in 1917 F5. But of course, things are going to trend up and down. But 25 is a great indicator for us right now. That seems to be that market average for us to work with. So now just kind of really quickly scrolling through my portfolio here, you see that I always track the PE ratio of all the companies that I hold. And, there's some that are right here, like a Costco, almost at 50. I've got still Jones way down here at 10. But it really just kind of gives me that general indication of, hey, what are my companies worth? What do I maybe need to put some money into? I have a couple that I'm really watching closely, like this EQB stock. It's below 8 right now. It's kind of an indication of I need to either understand that there's been a lot of bad news coming out lately and people are selling out of it for some reason, or maybe it's just undervalued and I should put some money in there as I could really profit out of it in the long run. Now, you're also always going to get some anomalies in there in the PE ratio with companies like Tesla. As you can see, the PE ratio is well over 200, and that doesn't seem to really check out with what Tesla itself is doing. Now, we can get into the whole debate of if Tesla's overvalued or undervalued. I'm not going to really go there, but it's an indication of financially that the price of Tesla today doesn't line up with the profits that they're bringing in. But again, people are really looking at Tesla as a growth stock, so it's just an indication for you to kind of start looking into a particular company. It's not an end-all be-all stat that lets you know that, hey, you're going to make money here or lose money over there. So how do I actually put this knowledge of what the PE is into practice, especially after I just said that the S&P 500 is sitting around 25 right now. So all of these companies that you're seeing on the screen here must be undervalued, but unfortunately that's just simply not the case. These aren't going to just print money for me. Each sector and industry is going to have a different weighted average for their PE, as some are maybe a little bit undervalued or overvalued for whatever reason, or maybe that's just kind of where that industry sits. So for me, the financial industry kind of sits around that 10 to 11 range. So kind of with that knowledge and in that comparison of all of these together and the rest of the market, I know that when I have this EQB stock down at about 8, it's a little undervalued in comparison, whereas IFC is maybe a little bit overvalued, but it's definitely not going crazy, as again, the rest of the market is around 25. So hopefully that was helpful for you to kind of start to gain that understanding of how you're going to filter out some different stocks in the market and how to put your money in there to kind of maximize your profits. Especially with these blue chip dividend paying stocks, we really want to make sure that we're using our money efficiently, and the PE ratio is a great opportunity for you to kind of have that opportunity to know that, hey, this company is probably going to give me some profits in the short to long term, as maybe they provide some good news or whatnot. But hopefully you enjoyed today's video. If you did, please do remember to subscribe and like the video, and don't be afraid to share it out with some friends. Otherwise, thanks so much for watching, and I'll see you in the next video.